Today, I'm very happy to announce that we have Yuan Lynn. She's a CCIM, which is a certified commercial investment member and a recognized expert in commercial and real estate industry. She is a real estate broker and also a founder of Real International Brokerage based in Austin, Texas. Let's welcome Yuan Lynn.
Hi, Cindy. Thank you for having me.
Thank you so much for your time. Do you want to introduce yourself to the audience?
Yes. Hi, my name's Lynn. I live in Austin, Texas for almost 30 years. Before I get into real estate, I was in the high-tech industry as a programmer, a program manager, and got involved in the real estate investment for the last 20 years and helped so many investors out of town, from out of country, invest in real estate in different form. So happy to share my knowledge, experience, and answer questions you have here.
Thank you. So talking about real estate, what's your outlook on the overall US market?
Well, real estate definitely was on the roller coaster ride for the last 2 years. Who imagined, right? In the middle of pandemic, real estate just start booming. I think that's one surprise we all had. But at the end of the day, it's really makes sense, right? There's so much money being printed it, and also stock market doing so well. So I think people just have a ton of money to invest. Also,
that's another big
yeah, another big driving force is millennial buyers. I think millennial buyer is one of the #1 top buyers in the real estate market. I'm talking about people from 30, 35-ish, 40s range, because that's baby boomers' kids, right?
Yes.
Yeah, we always talk about baby boomer generation. There's a lot of money to be made in the baby boomer because of the largest population. But if you look at millennial right now, they surpass baby boomer, become the largest population in the US. I think they counted about 42 million. And baby boomer will buy average demand for the home is 1.5 million units of home within the United States. But here's the issue here. Ever since Great Recession, 2008, the home building business got hurt so bad, right? And up to today, we have 5 million shortage of the home. Okay. And each year they produce less than 1.5 million homes, even in today's market. How you have less than 1.5 million and supply to 1.5 million new demand just from baby boomer. So housing shortage is really, it's a number game. Okay. You don't have enough housing supply, the demand's high, the price will go high. So it's just like that.
Got it. Yeah, I totally understand. The supply and demand really applies to not just real estate, but everything, like almost everything that you can see in the economy. Yeah.
Right.
So I know that you specialize in private equity part of real estate. Do you want to share what is it? What is it? Yeah.
Yeah, people also talk about private equity, also talk about syndication, say, hey, I know so-and-so have a project, they are syndicating money, should I invest in that or not? I know lots of people have that question. So let me start with how I get to that. Just like everyone else's, I started investing in real estate early 2000. What I do, like many investor, amateur investor, I buy houses, right? I buy single family houses, duplexes, rent them out, become a landlord, go, oh, that's real estate investment. Or I go buy an ugly home. I do flip, renovation, flip, make some money. Oh, I'm doing real estate investment. And then later on, I start buying land, build houses, sell them. I go, oh, I can build. I'm a builder, right? All those are part of form of the real estate investment. So in the end, and as we having me and my investor having more capital, we start realizing, in the commercial states has more profit than residential, right? Instead of you buy, if your capital above $1 million range or above $5 million range, what are you going to do, right? You're not going to buy all the little homes everywhere. And commercial real estate will yield better, right? Lower risk, you have a longer term tenant. So I start doing commercial. Then, in the end, we all talk about REITs or real estate REITs, right? Because those are millions to tens of millions, billions of dollars to be involved. Yeah. So I started actually working on larger scale project that could be multifamily development or multifamily value add. I remember the project would require 17 million or 30 million range. Our typical investor will not have that much money to get involved. Okay, so what do? I use it, people understand a syndicate. Just say, hey, Cindy, you, me, blah, blah, blah. Okay, we put $1 million or $5 million, we invest in that. When the project finished, we'll share the profit, great, move on. So this is a simple, very simple term, talk about syndication or private equity. There's so many forms. In general form, people talk about PE, right? You invest in a fund. The funds will invest in all the real estate. Or larger scale. A smaller scale could be me and Cindy and you and Bob. We do a small project. We sell it next year. We make a profit. That's really like a JV or a partnership. Or anywhere in between. You can have 10 people, or some people say, I'm doing crowdfunding for this project in San Francisco. I need like 10 million. Okay, 100 people involved. That's syndication. So anywhere from 2, 3 people to REITs to in between, there are tons of different forms. I'm sure you hear lots of those. Some people say, oh, that's great, I made lots of money. Some people could say, no, I lost my money. Don't get into it, so risky. So they're all different forms. I just use the layman term and kind of explain, what people hear.
Got it. So thanks for your explanation. I guess what most people want to know is why invest in private equity compared to all these so many other options? Yeah,
good question on that. I think there's several. One could be, what I see common is one type of investor, they own so many rental property or commercial property already. Okay. They say, hey, I'm a landlord, I collect all that, but what's the other form? Now I have some cash. What do I do? So to get into the private equity, you do the syndication, allow you to invest in real estate, institutional grade real estate investment without having to have millions of dollars. So the entry level is lower if you do this form. That's one type. People just want to diversify.
How much is it around?
Well, I see if you look online, some crowdfunding could be a little less 5,000. My company, our entry level investment is 100,000. So some projects are different, could be 500, could be $1 million. So it depends. So generally there's different funds or different projects have a different level of entry.
Oh, I see like some that are like below 100,000 too. Do you also offer that kind of projects?
Not in my company, but I know people offer less, 50,000, 5,000, different. But we, over the years, we deploy over 100 million so far. Right now, we have 35 active projects. Equity we deploy, we manage about 80 million. So we active manage a lot of those and very successful. A second type of investor to join private equity, like so-called, it just like look for different terms. So like you mentioned, Cindy, people think about real estate as, oh, I buy a house and rented it. That's real estate investment. Some people just don't want to handle tenants. Too much hassle. And the cash flow is really limited. If you have a place where you have rent control, issue with eviction, and just people don't want to handle the headache. But they do want to, let's say they invest money in the crypto, right? Like what you saw, Bitcoin or stock market. So you have all that money, you cash out, what are you going to do? You're not going to put it in the bank. So they consider real estate as more of a safer investment you can carry long term. So I've seen a lot of people like to do that as a diversification of their holding assets.
Great, thank you. What are the risks when it comes to investing? You said it's a safer thing, but I'm sure all investments comes with risk, right?
Right. Yeah, the risk I see a lot of time coming with different factor, right? Of course, one most important one, it's a market risk. Let's say, for example, I'm going to say market risk. I'm going to summarize that. I'm going to explain. I think a risk coming with a market risk, and then the project, right? The underwriting, whether the project, it can have a great market, bad project, okay? Or operational, okay? You have a great market, great project, but you don't have the right people to manage that, they could screw it. So 3 types, I think, is most important. I'll give you an example for the market risk. People always think student housing is safer, correct? It's, doesn't matter what economy goes, you're always going to have a student rented, a college student. But look at this year, last year, okay, the student housing got hurt so much, right? Because COVID is coming in. I think people doing online classes. So those student housing basically is vacant for a year. Some could be vacant again this year. So there's a market risk right there. And as a student housing developer, say if you think that you put your money in the PE equity in the student housing project, if they don't manage their cash flow correctly, if they over leverage, what are they going to do? The bank might foreclose them, even though they have full bearing mortgage. But do they have the right financing? If they take too much of risk, it could be in trouble, right? And second type, project. Some people can like pretty picture, pretty dreams. Oh, I have a nice business plan. I'm going to do this hotel. I'm going to do this shopping center. I'm going to do all that. They present a really beautiful business plan coming in. And you're going to have to wait to understand whether that's something reasonable, right? They can send you a performance, the number look great. You got 30% IRR a year. How attractive. So underwriting also take a lot of effort. I suggest understand the market, understand the product, and understand the data behind it. We underwrite a project, multifamily project in Austin. They say, oh yeah, the vacancy rate is about 5%. The rent we can get to is $1.60 $1.50 a foot. So what we did was we actually call all the apartments around it. We did that last week. And we asked, what's their vacancies? Average rent we study for that project is $1.67. So if your performance at 1.7, you actually can get $1.67, you're pretty good, right? And they have a waiting list for all the units. Probably the most available one is going to be October. So we know they're almost full. Okay. So for that project, we decided to go with it. It's a $5 million equity. We're going to put it in, and we feel comfortable because we've gone through the entire underwriting process. Okay. And third, operational risk. You have a great market, great project. If the developer has no experience, they can mess up. Okay. They could really do. So I mean, I'm sure everyone will hear some stories somewhere, sometime. Some have that, right? So be really careful who you work with. If you have a track record experience, or that person had their own money in there, or they just want to say, hey, Cindy, put all the money in there. I don't care. do it. So they don't put your money seriously, you know.
Yeah.
So I
I've
think
seen projects.
definitely lots of risk. Yeah. I was joking with my son. My son is working at Wall Street investment analyst, and he mentioned he does a lot of financial institutional investment. He said one of his partner told him that at night when the partner look at the ceiling, all he sees is risk. So,
Where is he? In New York?
in New York right now. Yeah.
Ah, great. I mean, he would be a good person to interview about stock market.
Well, I talked to him. He does financial analyst, merger acquisition. He
Mm,
just got a job with one of the private equity, do the commercial industry, private equity.
commercial industry. Is that
No, like a commercial, like a retail commercial. People will buy companies doing any kind of commercial, you know, how I say this, commercial related. People will sell, you know, cars, drugs, beauty product, bags, you know.
got it. Got it. Very interesting. Yeah.
Yeah.
Would love to talk to him maybe down the road.
Yeah.
So, how can new investors, like get like someone who has never done this before, like invested in private equity, get started? And what are the requirements? Like how much should they expect to invest? And yeah, what are
Yeah, I would say if people like to start with something people understand, right? If you are residential investors, you do understand apartments, okay. If you understand retails or hospitality or industrial, you definitely pick an industry or pick a product you understand first. And also pick a market you like to invest in. For example, if you, let's say you're familiar with the East Coast, West Coast, for me, I understand Austin market. So most of my project are focusing Austin metro product because I know what population growth rate, what's the economic risk here, and how you can help you underwrite. So if you understand what type of product you're familiar with, what type of market you want to invest in, you just say, you know what, I have some cash, I have some money, I make some money here and there, but I want to invest in, like, for example, Austin market. Also here, like great market, there's so much growth here. How do I capitalize that growth? How do I get involved, right? And pick a project in that market, say, you know what, this project is doing multifamily development and they're gonna enjoy the ride for the next 5 years. The business plan sounds reasonable. Once I look at all the data makes sense, then you invest in that, kind of feel like, you know, you put the money in, just enjoy the market ride, right? So give yourself a chance.
great? What are the requirements needed? Do these potential investors needs to be accredited or?
Yes, good question. Most of the time we need a accredited investor, meaning your income be more than 250 a year or net worth above 1 million. Because we want to make sure those people understand the risk of investment, are capable of doing that. Then typically logistically will always be, you look at the project offering. If you like it, there's subscription agreement coming in, the company agreement. So there's different form of legal document. What I would say is, you know, if anyone would like to talk to more of those, come on, contact us. And we have been investing in that for almost 20 years. Like I said, mentioned right now we have 35 active projects. We're growing too. And so far we haven't really, you know, lost any money for our investors. So we've been doing very good.
That's great to hear.
Yeah.
And you said you've been doing this for how many years now?
We've been doing real estate investment almost 20 years. And
Oh.
private equity, we started the first one 2015. So for the last 6 years, we down and total, I would say over $100 million deployed capital. Last year alone, we returned investor money. We returned 15 million last year. Yeah, successful completed project. Yeah, we exited several projects last year.
Got it. In terms of like projects, what is usually like the length, like where investors will lock their money, like how many years, and also what is the expected return after every year and after the end of the term?
Right. Typically, depend on the project, could be as short as 1 year, long as 5-7 years, right? Depending on what's the project plan, right? What's the project plan? How long would that take? Typically, if you're looking for a project, we have different ways structured it. If you want to go to the safer route, okay, your annual return will be lower, but you will be higher priority because our investor, we set them up into different classes. Let's say class A investor, they have a higher priority, okay? When the project finished, the payment goes to class A first. Typically, you get to anywhere between 8 to 12% a year, okay? But you cap at that. At class B, typically you can get, after class A, you get a more return, take a more risk, right? We finished 2 major build for rent project last year. Our investor got 18% annual returns.
Okay, so at the end of the term, do they get additional or just 8 to 12 as well?
So depends, right? So if you want a more secure, lower risk, then your expectation on the return will be lower, like I said, 8 to 12%. But if you say, hey, I like the project, I like the product, I'm going to take a little higher risk, you can go up to 20% a year. So it depends on the investor risk taking. Sometimes I see investors invest in both classes, right? They want a safer one, they want to take more risk.
Got it. I thought usually like after the project liquidates, right, their funds, then investors maybe get like 100% or like at
right. I was talking about annually, right? The percentage I was talking 18, 8%, 10%, 12%, those are the annual return. So if you use a rule of 72, right? If you get 17.4% a year, your money will double in 5 years. So.
Got it.
Yeah.
But payments will be paid every month, right? Or annual?
It depends. If you invest in a project like a multifamily value add, we will receive cash flow in between. But if it's just a ground up development or land deal, you don't have cash flow. Everything will pay out in the end. So it really depends. So some project will pay out quarterly, some project monthly, some project will pay out at the end. Really depends.
Yeah, different projects, very different structure.
Right.
Got it. So I mean, how do people find projects that they can invest in?
We typically, first of all, I just want to say, we are a private company, right? So we don't go out, put an advertisement in Wall Street Journal and say, yeah, let's invest in with us. So come on, contact us. We will let people know what's in our pipeline. We want to talk to investors, understand their investment goal. Once we talk to them, we understand what's their risk level, what's the investment goal, and what's the funding they have, what the level of comfortable funding they have. We can give them advices on what makes sense for them. So we don't really go to public solicit any of the people who are not our client.
Got it. Mostly referrals, right?
Yeah, referral, or someone, let's say, hear our talk, they say, hey, interesting, I like to invest in Central Texas, Austin market, want to know what the opportunity, how can I enjoy a part of the growth? Happy to talk to them.
Right. What are some of your strategies, to evaluate or underwrite, the different opportunities or projects, right? Mhm.
For me, we've been doing this for so long, it's all the number game. So when we see a deal, first we see if the number's right. Do we get this right price? Whether that's apartment, whether that's a land. And then based on the market projection, the next few years, we can underwrite it to a way we see if that fit into our own business plan, right? Can we take the risk? Let's say if the black swan on the market coming in, if there's another something coming in, how can we make sure we don't lose all the monies, right? So, and the right partner, who do we work with? I'll give you an example. This is going to be a long story here with me, okay? I'm doing a land deal, okay? This land deal is in Austin, Texas. There's a 44-acre. I had it on the contract. I'm going to close in November. 44-acre, 5.2 million. Okay.
Okay.
How do I get there? That's a long story. The one side next to it, it's a 40-acre. I bought for my client. He's in California. He moved to Austin to build a 700,000 square footage warehouse industrial for his company. He makes knives. The knife sells at Costco across US. So what does that have to do with my tract of 40-acre, right? Here's the thing. He paid for $4.50 for his 40-acre, okay? 7.7 million. Amazon also won that site. Amazon competing with him also wanted to pay $4.50. But Amazon was too slow, my client got it, okay? Now, my 44-acre become available when the process of helping my client buy his land. You know how much the seller asked and negotiated. It's less than $3 a foot. Okay. So I bought it for 5.2 million. So, okay, once I have it, I go, what do I do with it? But I know the market price, right? Okay, $4.50. So I talked to the agent who represents Amazon to my clients that say, hey, Mo, do you have someone on this side? He go, yeah, I remember we lost this to you on the Amazon side. I do have a buyer from Berkeley partner from Dallas. They can buy it. I said, you know what's the market rate? Oh, $4.50. Guess what? So he gave me an offer to pay for 25-acre for 5.1 million. Okay, remember, 44-acre I paid for 5.2. Now, someone going to buy 25 acre from me for how much? 5.1 million.
Wow.
Okay, once I sold that pieces, guess what happened to the remaining tract I own for free? Okay, so you are smart. Everybody's smart here, okay? You understand the number. Once I tell you the number, okay, now you know the risk. And you also know what's a gain, right? Make it simple. So are we going to close the deal? Yes, but the work is not done yet. So my due diligence ends at end of October 30th. During that time, I'm paying engineer to do the survey, topo survey, tree survey, understand the environmental, out of the risk, utilities, make sure nothing strange on the side, nothing I can build, nothing that stop me from building it, talk to the city, make sure they are cool with the zoning. You know, then I maybe end up play somebody with the golf, saying, okay, help me with this. In the end, I want to make sure this site has no constraint that we can't build it. I can't sell it. So if another guy coming in gave me another $4.50 by the remaining site, you think I'm going to sell it? No. Why? Well, what's a hurry, right? I own the land free and clear. Why don't I hold it for 3 years? See what happens, right? So this is how normally the things goes.
What kind of zoning is that?
Right now, there's no zoning, but in the land future development is zoned for commercial and industrial.
Got it.
So yeah, that's one of the reasons this contract fell through from the last buyer, because they're a home builder. Home builder has to put the home on there. So if they do industrial, they can't make it work. But remember, next door, my client has a giant industrial building, right? the supplier, the vendors, all the people will come into this space.
Got it.
There are other factors.
So you don't
We
plan
also,
you don't plan on
we have a, go ahead.
sorry, you don't plan on building it?
No, I don't. Well, most of my expertise is residential because we have, I have my residential brokerage. I was a broker agent. We know how to do sales. We know how to do rental, all that. I also do multifamily, but I don't typically personally do industrial, retail, all that. We own retail center, but I don't develop those. I give it to someone who expert in those. Yeah. So I flip the land. We hold the land too.
Okay. I mean, I think you didn't get the investors' money for that, right?
For this one, yes, we will do. What we do is my company, every single project, I always have a long line of people on the waiting list. So people got frustrated. So I think for the remaining of the year, my wife will have all those projects similar to this, really good, profitable one. I decided to do a PE, private equity, maybe 10 million or 14 million. Then I just use the money investing all my top tier project. That way everybody got a chance to invest every one of those. I was talking to one of my investors. She go, I can't even get on your waiting list. I goes, no more. You put the money in the PE, then we invest in that project. So that way you can diversify. Yeah.
Got it. Got it. So you're just gonna build a fund, right? Basically.
Yeah. Yeah, exactly.
Yeah, I think it's probably easier.
Yeah. Yeah. Yeah, people are going to say, what if there's no other people investing? What are you going to do? We close it with our own funds. So that's how typically we do. Yeah, we have some anchor investor, our own funds.
Got it. Got it. Okay. Any practical tips or advice for for investors who are interested in getting into this real estate private equity?
Yes, I would say a lot of people, trying to understand, say, I think, okay, how I said, let me put it this way. A lot of my investors, I talk to them, they always say, oh, I should talk to you years ago. Oh, I should know you. I should have known you years ago. I said, why? They go, well, they were just scared. I use the scared, okay? Because they were concerned. Their hard-earned money in the bank, but because they don't understand, okay, also quote unquote trust, right? There's no trust in someone or some project. They hear the paper, they saw the paper, but it's really, they can't have that level of trust to give their money away, have someone else manage. I think the first thing you gotta do is, start learning about the company, about the project, about how people do it, how other people make money. And get over the first step of being scared and start building up the trust relationship. Once you have that, you're gonna say, gosh, this is so profitable. Example, I think was 4 years ago, I had one investor. She's very cautious. She's my age, 50, over 50, very cautious. You go, I don't understand what you're trying to say here. Okay, let's trust you. 100,000, me and my friends, we're only gonna do 50,000, okay? So you invest in the first project. They form a little entity. So over the years, I've made so much money for her. She become one of my VIP investors, invest over $1 million. Why? Every time we make money, we send that to her, principal, interest, earning, everything to her. She reinvest in, we send back to her. After so many years, she was like, whenever I have money, I'll just put it in. So that's a level of trust we're building.
Got it. So basically, the tip is to educate yourself, right?
Educate. Yeah, start doing it. Right. But also be careful. There's so many people doing quote unquote syndication online. Because think about those people. A lot of them are agents or they paid by commission. Let's say Cindy invests 50,000 in that funds. They earn commission, they walk away. Okay, then you got stuck with a developer, operator, whatever general partnership. So, for us, we truly have a reputation, our own money in the deal. Okay. And it's not like, you know, we we can take your money, we don't earn some commission from it, right? So truly it's a co-investing methodology. So we co-invest with lots of investors. So and we probably have more stake in the game than most of our investors.
Okay. So what is the best way for these LP investors, these LPs to minimize their risk? Maybe diversify?
Yeah, I would say when investors come to me, I always tell them, hey, go to the stock market, right? If you understand stock, go invest in that. If you understand Bitcoin, invest in that. That's nothing wrong with that. But if you want to invest in real estate, make sure you allocate some portion of your asset, invest in real estate. And real estate, it's something last generation to generations, right? Always, it's help you get rich slow, but slowly but surely, right? They have a compounding effect. So I don't understand stock goes up and down, up and down. Crypto point definitely have a good ride. But for real estate, I think it's a solid investment your investors should really consider. Typically my age generation, they love it because we can't lose, right? But younger generation, you're pretty young. They want to take the risk, they want more return. But I think diversification always good. And lots of time, I'm a little afraid to show our project performance to investors showing over 20 or 30% IRR, because I think when a number gets so high, it's more risky. So I like the number stay relatively low, but safer. Okay. Like I said, rule of 72, right? 14% return, you double your money in 5 years. Not bad. But sometimes, give you one example. We bought the land, 5 acre, we're closing August, 1.2 million. I go to city, got zoning changed. So I'm selling 40 paper lot on a 5 acre. Friday night, I got an offer for 3 million. We are what? October, right? 2 months. But I start working on that deal last year. So I spent a year. Investor money only being there for 2 months. We doubled it. So, I mean, this is a home run deal, right? Not every deal is going to be like that. You have the opportunity, definitely take advantage of that. Yeah.
Got it. So for that double deal, is that part of the fund or just part of or just like a project for just
that one? That was just a project. That one I have a long waiting list of investor. That's one of the reasons I wanted to do the funds, because I can only allow so many investors invest in that, right? So I decided to, and I got pretty quote unquote upside investor. I can't get into your deal. So for the ones we're gonna have this year, I'm gonna use the fund.
For the land one, how much return are you giving to the investors? Because you're doubling it, right? So
right. So we have an entity structure, so everybody gonna win. Yeah.
So basically, I'm guessing way more than 20%, right?
Oh yeah. But I don't advertise that, right? It's sometimes it's you get a home run, but most of the time we underwrite this very safely, conservatively. Yeah.
Got it. Thank you so much for sharing your story. That's really good examples.
Yeah, no problem, Cindy. Yeah. Happy to share that with investors. Happy to help people understand it. I mean, I only share one aspect of it, right? There's so much in this. I'm sure keep on learning. You're all gonna get so good.
Yeah, this is why like I started this channel, right? Because my main goal is to educate people.
Right. Yeah, absolutely. Great thing.
So how can how can people reach you?
They feel free to visit our website, realinternational.com. Have some information on there about our team, the project we've been doing, but not every information's on there. You probably can find us on the social media too. I'm not so great at social media. I'm an older generation.
So
But
how do you communicate with your with the investors? Is it through email or?
yeah, email, phone numbers fine too, call office, but email would be best way. Yeah.
Great. Yeah, we will leave all her company and our her details on the description below. So please check it out if you wanna.
Yeah.
Yeah. All right. Thank you so
Thank you,
much for your
Cindy.
time. Mhm.
Yeah, thank you. So good to see you.
Yeah. We look forward to seeing you on the next show.
Absolutely. Okay. Thank you.
Have a great day. Bye.
Bye-bye.